Hello and welcome to this video which briefly illustrates the key differences between product costs and period costs. My name is Cam Scully and I will be your guide in this video. The video will be useful for anyone new to the concept of management accounting. In my biased opinion, a working knowledge of management accounting is essential for anyone in business. This video will compare and contrast product costs and period costs by using a simple example. First, each cost will be briefly explained. Second, an example will be used to illustrate the differences between the two. And finally, the accounting treatment of each will be explained. Okay, so here's a quick overview of product costs. Simply stated, product costs are the costs which relate to a product. Materials and labor directly involved in production are two types of product costs which are easy to understand. Overhead is another type of product cost which is much trickier to comprehend. We will come back to that shortly. Product costs are always capitalized, meaning they are included in the costs of products. The final characteristic of product costs I will mention is that they are expensed when the relevant inventory is sold as part of cost of goods sold. Now contrast this to period costs, which are costs that relate to business not part of the production process. The salaries of staff in support services like human resources and finance are good examples of period costs. Note also that period costs are always expensed in the period that they are incurred. This diagram will help to illustrate the differences between the two. Often a company will have one building that is home to both the production plant and the office part of the business. The costs related to the office part of the business are almost always period costs because they are not part of production. My next statement will not surprise you at all that the costs related to the plant are almost always product costs because they are involved in the manufacture of products. Now let's have a look at a simple example that highlights and illustrates the key differences between product costs and period costs. The company in our example pays monthly rent of $100,000. And as you can see, in terms of physical space, the office takes up 30% and the plant takes 70%. The office share of the rent then would be $30,000. This part of the rent is a period cost and is therefore expensed in the period in which it is incurred. The remaining $70,000 that pertains to the plant is the product cost portion of the rent. We would capitalize this, making it part of the products made during the rent period. Now let me explain the accounting treatment of this $70,000. How do we capitalize it? All product costs, which are usually materials, labor, and overhead related to the plant, such as the $70,000 rent, are put into a work in process account as costs are incurred. When the products are finished, the work in process is moved into a finished goods account. When the finished goods are sold, we take them out of the finished goods account and include the costs in the cost of goods sold for that period. Cost of goods sold is a special type of expense account and, as you can see, is affected only when the product is sold. The costs are tied to the product regardless of the period that the costs for it were incurred. Thus the term product costs. Okay, so back to when the company spent the $100,000 in rent. How would it be accounted for in the books? The journal entry that would be recorded would be as you see. We would debit rent expense for $30,000, which is the period cost portion. We would also debit work in process for $70,000. That is the product cost portion. And since debits must always equal credits so that the accountants can remain calm, we would credit cash the full $100,000 rental payment. I hope you found this video to be a useful look at product and period costs. Thank you for watching, and I wish you best success in your quest to improve your management accounting knowledge and performance.